This conference will now be recorded.
Good evening, everybody. This is Greg Morton. It is Saturday, August 27th, 2022. This is the weekend update for the Greenville Eastside IBD Meetup Group, as well as the Stockyard Meetup Group. As always, standard disclaimer, not giving any advice to buy or sell any particular securities. Topics for today, look at the impactor, talk about what do we see this past week, was it constructive or destructive action, hint, whacked, so not good. We'll mention briefly a sector holding up the best, and then I'll mention our most recent monthly meeting and what's coming up. So Impactor, as always, the most important letter in Canslim. As we mention every weekend, O'Neill teaches us to diagnose, interpret, don't predict. And we look at three things in this order of priority. So the action of leading stocks. Right now, I think most Canslim growth stock investors agree there's three potential true market leaders. So I just called them the three little pigs, and we're waiting to see if the big bad wolf is going to blow their house down too, or if we're going to make some progress in this market. So we'll look at those three charts, look at actions of stocks owned, and we look at market pulse, distribution day count, price and volume on the indexes, which I do through the coloring book. So I think everybody would agree right now that the three showing the most strength are in phase, Celsius and Shockwave. So we have solar, one from solar, one from retail, and one in the medical space. So let's get out of here and go over and look at those. I will start the leaders first this weekend. So here's those three, go to weekly charts. So here's in phase, had a nice, go back to the daily so we can see it. So here's the gap up on earnings, continued, held, volume's been drying up. It's just consolidating after this big run up. Kind of looks like a little bit of a high tight flag maybe. Have to measure the height of that flagpole. And so obviously that is a very strong stock right now. Shockwave, same thing. So all these started with earnings gaps, triple digit earnings and sales, his run up. These aren't actionable, of course, up here. They need to set up some sort of entry. And as always, true market leaders are hard to buy. The ones that are hard to buy are often the best. And so then here's Celsius Holdings. So same thing, big gap up on earnings, triple digit earnings and sales, just a strong stock. So let's take a look at the indexes. And if those three take it on the chin, like seems like everything else did Friday, won't be good. So here's the NASDAQ daily chart. Things really started, a week ago Friday. We had a bad day, had a bad Monday, then came back, still in dog days of summer, low volume. And then Friday was really ugly, terrible closed, plunged almost 4% on the NASDAQ. That's a big plunge. Of course, it takes 7% on the S&P 500 to trigger the circuit breaker. So it wasn't circuit breaker bad, but it was still pretty bad. Had come up above the 21 and a 10, just slammed back below those. Hopefully the 50 will hold. We're back at the 25% offline. The only thing that was kind of odd to me about Friday, we still have this really low volume and it kept plunging all day. Started with, of course, Powell's comments at Jackson Hole. He spoke at like 10 a.m. And it just felt like, there's no way to prove this, but it just seemed like algo / news driven selling and no bids, low volume. It was a nasty sell off, but, it wasn't on real high volume. The institutional traders are still sort of gone, finishing up their vacations till after Labor Day. So, maybe this was a shakeout day on not terrible volume. I know Scott St. Clair mentioned that in the weekend Market Smith video, and I was sort of thinking, I didn't have shakeout in my mind, but I sort of had the same thing. Like this was a bad day, but it wasn't like an intensely bad day, just in numbers, not in volume. So we'll see what happens. Let's look at the weekly. So weekly, came back to the 10-week. Maybe it finds support there. Couldn't get through that that moving average up there, 40-week, is the one we need to get through. See what monthly looks like. Yeah, so not terrible. We also are now, I have it on the daily chart. Yeah, so we're 9 months off the peak. So about the average length of a bear market. Some can be longer. We still could have another leg down. We could come down and undercut this. So who knows? S&P 500, bad, looks just as bad, except again, not intense volume, just higher volume. Slam back through the 21, none of that's constructive. New York Stock Exchange, same thing, slammed through the 21-day. Dow slammed through the 21-day off. I mean, that being 1,000 points off, it felt like a magnet. In that last hour, it's like, yeah, it's probably going to get there. Russell, 3.3% off, slammed through the 21-day. S&P 600, same thing. So they're all moving in lockstep. Just was not pretty any way you slice that, except for that question on not being intense volume. It's about the only way I know to say that. And then group teaching portfolio, like I said, the weakness started that Friday before, bad day, continued Monday. Then we had 3 decent days this week and then got slammed again on Friday. So for the month, and the month's effectively over, we've had the last trading Friday of the month, so I ended in like O'Neill does. So just a flattish month. Let's see, we're 63% invested and still down over 10% year to date. That came down to the 8% range or something on these good days, and then we just get slammed right back up. So I have 2 full positions, tan and lithium. Those are doing okay, and then just some weakness, slight weakness in these last 3. So that's sort of where we are there. And the coloring book, to look at that, so you can see the colors just show us the deterioration. It just pops off the page. So as of Friday, I only have 8 buying days, 11 selling days, 3 distribution days on the NASDAQ, 3 on the S&P 500, and 4 on the Dow. So those aren't excessive numbers, but all our MMTS columns slammed to red and yellow. Everything's red now. Window of opportunity closed. IBD, I'm sorry, is still yellow. They went to uptrend under pressure, but everything else went pretty violently red. Markets were whacked. I put the bad days in a bold red outline, so you can just sort of see that these were big losses. So next week will be interesting. Sort of maybe show us, actually the next 2 weeks, because we need to get past Labor Day and get everybody back in the office and see which way the market's headed. Of course, the Fed's extremely hawkish on raising interest rates till inflation goes away, which is still very high. So that certainly could drive that third leg down, actually. So don't fight the Fed. We'll see what happens there. So let's go back over here. Oops. We covered all that, talked about the 3 leaders, looked at that. Current market notes, so we looked at that serious damage. Solar stocks still holding up, mentioned Enphase, TAN, the ETF for solar stocks, trades like a growth stock. Holding up, that's one we have in the group teaching portfolio. Medicals, we talked about Shockwave, chip related, maybe ON semiconductor, and then yeah, okay. And then some current market notes. So I was going to mention oil and gas. I said this last weekend was recovering, building bases. And then this weekend, so just in these 3 lists in the paper, the IBD 50, Big Cap 20, and Sector Leaders list, there are 28 oil and gas stocks. There are 23 in the IBD 50. Almost half of those are oil and gas stocks. 7 in the Big Cap 20 and 5 on the Sector Leader list. And there were only 12 sector leaders, if I remember correctly. So there were 28 total because there's some overlap in here. And so of these 28, half of them have triple-digit earnings and sales in the last quarter. So it just looked to me like the commodity stocks are dressing up early for Halloween this year as growth stocks. So they led earlier this year, and maybe they're going to lead again. And they're, a lot of growth stock investors, me included, find it harder to trade the commodity stocks. But need to pay attention and take what the market gives us, as I was discussing with, or Marty was discussing with me on Twitter today. So my current market view, all the MMTS is red, window of opportunities closed, IBD's uptrend under pressure. So it's still a uptrend, at least in name. We'll see what happens, but flashing yellow lights for sure. Your weekend routine's critical. Honor your sell rules. And if one is buying anything, because it is still an uptrend, you need to adhere strictly to Canslim stock selection criteria. Still a tough market environment, as we found out this week. So my sort of signs for this weekend are yellow, and maybe should have had some red in here, but could be some severe personal injury ahead. That doesn't look pretty. And don't block that exit door, because Canslim may be shoving us out once again. We'll see what the next week and 2 weeks bring. So charts, maybe I covered that already. We looked at those stocks. Those were the 3 big ones. One other area, lithium stocks. These are the 2 main ones, LTHM and ALB. So they're holding up. They didn't get whacked terribly, so they were down a whole lot. Just look at the percentage down. So these last 2 were down a whole lot less than the market. So they were actually holding up, and you can see that shows up in the RS line, which is still pointed up. Probably the same on lithium. Let's look. Yep. So they're outperforming the market. They're down less than the market, so they're still outperforming. So we can see those RS lines holding up. And then, like I said, a lot of work you can do in the newspaper this weekend on the oil and gas charts, since those are holding up. So last weekend we had the National IBD Meetup online event, the first one that they've done. So here was the agenda for that. There were some really good speakers and some really interesting presentations. So that recording's out, available for everybody. I'll put the link down below this recording on YouTube. So if you didn't watch that, I think that's well worth your time. And then my monthly online meetings. So our next meetings, educational meetings, Tuesday, September 20th, 7 p.m. Eastern. You register at the Stockyard Meetup site. Monthly tuition meeting is $12 each. If you're a first timer, I send you the prior month's meeting that we had in August, and then everybody signs up for one. You get the recording, slide decks, links to webinars, articles, whatever I talk about during the meeting. I usually send out 4, 5, 6 extra links with each post-meeting email. So here's what we covered this past week. Looked at the Impactor, did a more lengthy segment on Canslim nuggets. In fact, I think we had 10 or 11 of those, and then those tied back in with our educational topics. So we spent some time, did many educational topics, looked at the ants go marching in, talked about that, and something David Ryan's talked about on IBD Live. We looked at using MarketSmith and saw where some of these top-rated mutual funds are actually stomping hard on the gas pedal. We looked at those stocks, particularly Fidelity Contra Fund, piling into a couple. We looked at the lithium stocks, did something new on writing a daily and weekly battle plan, looked at potential true market leaders, stock-owned, IPOs. We kind of did a deep dive on own holding, which is they do the cloud running shoe. So we took a look at that in a little more detail than we've done lately, because that one potentially set it up in the due diligence phase, as well as Array, ARRY. The other one owned as ticker ONON. So we looked at those. Here's a list of prior educational meetings. These can be ordered. If you don't have a set of written sell rules, you really need that. If we're gonna have a bad market, it's a great time to be studying and writing your sell rules. So covered that in 3 meetings there starting in January, and then had 2 meetings here, September and October, on a complete weekend routine using the newspaper and MarketSmith, and to come up with a tiered set of watch lists each week. So those were just other topics. If you're interested in those, you can email me and I'll send you the ordering information. Those are $15, includes the slide deck and the recording. Here's the meetup sites by name, and then you're on the Stockyard YouTube page. So there's other videos on there, teaching video on the group teaching portfolio, the 8-week hold rule teaching video, and a bottoming basis video. So that's it. Hope you guys have a great weekend routine. Pay attention next week. We'll see how these signals resolve themselves. Do we keep going down? Does volume come in on selling? Or was this a shakeout and we see some recovery? So that's it. I'm out of here.